Let's go to the edge of the trading floor. Scott Gecas is here with us. And Scott, boy, tough day all the way across all of the ag commodities. We start out the day with the live and the feeder cattle market limit lower. We'll talk about that in a moment. But first, let's go back here and talk about this USDA report. I want to get your thoughts on the report. And now we're trading limit lower in the corn market. What do you think of that?
I don't have an opinion on this. The USD numbers, it's just not coinciding with some of the farmers that we've been talking to. They're saying that there's more corn planted this year than versus last year. Southern Illinois, we're still seeing some open-ended fields, not even anything planted. It's frustrating. Some of the farmers that we've been talking to are extremely frustrated. No one knows what to make of these reports. So, I mean, it's just very disconcerting of what the numbers actually came out.
What's the mood of the trade then there among traders that you're talking to?
Everyone's just playing, they're a little bit flabbergasted. They don't really know what to make of these numbers. As far as the option flow goes, I mean, we were walking into it. We had about a 22-cent expected move. Obviously, it blew right through that. So the option volatility was elevated. It was well as it should be coming into these big reports. It's really odd. The upside calls had such a big differential skew to it than the downside push. But obviously the market was wrong versus the USDA. So, everyone's now trying to position what their inventory was now.
Okay. Well, I want to look at some numbers here, Scott, before we go to the break, and then I want to come back and talk to you about the cattle market. What Scott was talking about was those production numbers. USDA now pegs this year's corn crop at making 169.5 bushels per acre. And the soybeans, they left it pretty much where it was, 48.5 bushels per acre. The trade was expecting 47.5 for soybeans, 165 for corn. So one of the reasons we're seeing limit lower. Speaking of limit lower, we'll be back in just a moment and talk about the livestock trade next. I want to start this segment by passing along the cutout information that we had out just a little bit ago that kind of got lost in all of the report action. Here at midday, the beef cutouts are on the higher side. The choice up 55 cents at $216.92. The selects up $2.92 at $196.73. A huge jump for the selects. On over to the pork side of that cutout trade. Everything higher but the hams. Carcasses up $2.93. Loins up $1.75. Hams down $1.09, but that belly market continues to be a rocket. $187.85, up $17.76. Let's go to the futures. Live cattle, feeder cattle futures. Once the news broke about the Tyson plant fire in Garden City, Kansas, or Holcomb, Kansas to be exact, just west of Garden City, that tanked the cattle market. August live cattle at 105.05. All of these contracts limit lower. Feeder cattle market, same thing here. There were some that were wondering if maybe, and we talked to one trader this morning, said, well, maybe if we take the corn market down a little bit, maybe the feeder cattle market would rebound. It has not. We haven't had any trades because we've been locked limit lower. Now on to the hog market. October up 20 cents, 67.17. December, that was up a dime earlier, now is down 88 at 63.80. Let's go back to the edge of the trading floor. Scott, first of all, your thoughts about this cattle market?
Yeah, the cattle market, I mean, as soon as the news broke, we've seen a big spike in volatility, big spike in volume, all the way to the downside. That's one of the reasons why we're limit locked. So, where Tyson did say they're going to come out and rebuild that plant, it's just going to take a little bit of time, so we have to wait and see how that's going to play out. There is a bullish tone in the cattle market just with the European news, with the deal. They're expecting the exports to increase to the European Union a little bit more than usual, so we just have to wait for those numbers to come out.
Okay, what about this hog market? We saw those front couple of contracts really try to show a little bit of strength, but now we're starting to back up from that.
Yeah, with the hog market, it's odd because you always have that African swine fever in the background. Mm-hmm. So with that being said, that's going to always have a bullish tilt to it. So we just have to wait until those numbers come out. There's rumors that China's still going to buy U.S. pork even with the high tariffs. So we're going to wait and see those export numbers. As soon as those export numbers come out, we're going to have a much clearer picture of which way the direction is going to go.
Scott, thanks a lot. Always good to visit with you.